Will we run into any issues? Nope, we are live.
Totally.
Oh, it was only just a small little part. This is
Dang.
we're getting close to that perfect pitch though. We're getting there.
It's because I'm leaning back and I'm not like all up in the mic.
Yes.
So I hope you can hear. I'm gonna try to project.
I was gonna say you look mighty comfortable.
Hella leisure. Wait, hold up. Let me.
There we go. How are you, Jolene?
I'm chilling. As you can see, I'm good. How are you doing?
I'm doing good. I'm doing good.
That's good.
So yeah, so I'm looking at the chat right now. It says chat disconnected. It says unable to connect chat. Try again later. Like, what is going on with YouTube's chat?
Right. I need to know who the first person is, like, I don't know. It's kind of like a ritual now. And I like to know who the first person was.
I'm just saying, like, can we, we may need to roll up on YouTube and be like, yo, what's good?
Seriously. Alphabet. What's up?
I mean, shoot, you guys report a solid earnings beat, but yet at the same token, you're struggling to keep your chats going. So
hey, where are the priorities? What was guidance on these on these live chats? Okay.
I have no idea. I have none. Not a single clue. But I mean, today is Thursday, February 4th. And we are officially in February. Now, I just want to make a declaration. What do you think about this? Because everybody be talking about Black History Month, but I like to take it all the way to June. What do you think about that?
It's fitting. Hello, Juneteenth.
I mean, yeah, we could just like do the culmination of like on Juneteenth of all the heroes and sheroes that we celebrate.
Yes.
I'm here for it. Let's do it.
Yeah.
How do you like our title, by the way? I dip, you dip, we dip.
Hey. Where's my hand? Where's my hand? It's on my hip.
What's up, everybody? This is Mark Monroe, and I'm accompanied by the wonderful
Jolene GC in the place to be.
And this is Hot Take Thursday, a show in which that we get to listen to some of your questions and we get to answer them off of the top of the dome, because clearly I don't know what you guys are going to ask, but you definitely send in your questions to the Come Up series as well as Joel and GC, and I get to answer them in the best shape, form, and fashion that I can. I try to, give you some good information. I think there's only a few times in which I've actually been stuck, but, I like to try to keep that nice record going. So yeah. Oh, and by the way, everybody's been asking about this gentleman in the background. So I guess, who are you?
Who that is?
My name's Aaron, one of the twins. You'll meet the other half later.
Okay, well, there it is.
What we know? Hello, Aaron. Thank you for speaking and joining us this fine evening.
Okay, back to note taking.
Back to work.
Nah, but shout outs to Aaron. He's been one of my mentees, and on top of that, his twin brother Andre, in which you guys will probably meet sooner or later. But let's get into today's show, because we got a jam-packed show today. Always. And we got to see if we can also like outdo ourselves from Tuesday, which was quite the doozy from what I heard. So you ready for today?
Yeah, I'm ready. You ready?
All right. Well, okay. I guess before, if you haven't subscribed yet, I mean, come on, what are you doing? Hit the button down below. It's just to subscribe. Or if YouTube is in a different language, then go ahead and hit that button. And then on top of that, if you like us, or if you like the video content, or if you like today's show, or even if you haven't seen all of today, because clearly we're talking now, still hit that like button so that way it can get out to new cousins or primos or whomever else that there is. And on top of that, if you didn't like it, then that's okay. Just go ahead and hit the dislike button, but please tell us why, so that way we can always get better. We definitely read the comment section, so just let us know. No shade. Just we want to get better. And then on top of that, if you want to be in the know, aka the Cool Kids Club, tongue tied because I'm excited. Go ahead and hit that bell so that way you can be in the know for when we post new content. So without further ado, Joel and GC, take it away.
What's up, everybody? Welcome to Hot Take Thursday. This is Jolene GC in the place to be, and we're going to get right into this market, which was a green. We got the Dow coming in at 332.26 points. S&P 500 was 41.57 points, and the NASDAQ was 167.20 points. Now, checking out the volatility index, aka the VIX. The VIX was at 21.77. You know, when that thing starts to go down, it's a good sign. So for sector performance, we look at, well, there are 11 sectors. We track the top 3 and the bottom 3. For the top 3, we got financials, tech, and industrials. And then for the bottom 3, it's real estate, health, and materials. Then for our pick performance, we have 31 what we call SIPs, and you can find those at That Come Up series on Instagram. Coming in at number 1, Square. Shout out to Shaquille Sunflower. And then we got DocuSign and Best Buy. And then the bottom 3, WWE, who had earnings today. Mark, I don't know if you looked at their earnings, how you felt about that.
I did.
Okay. And then we got TAN, which is the solar ETF, and Qualcomm, which I heard Qualcomm was taking a little dip because they missed some things with their 5G. But we'll get into all that later. So today, it seems like, Mark, you know, based on the title of the show, I Dip, You Dip, We Dip, it sounds like chips. Now, you know, I'm all about all chips, no dip. Somebody's trying to put some guac on my plate, and I'm like, hold up now, hold up. I said no dips. But, you know, we'll get into all that. I do want to point out that, as you know, it's February, so we got Black History Month. Shout out to all the ancestors. And, you know, we got some pretty dope ones. Also, I do want to shout out Brian Clyett, our, I guess, you know, our historian now, self-appointed. He's very knowledgeable. And so he has taken it upon himself to give us the Black history ancestors that we're going to focus on today. So today is the HBCU edition. So get ready to shout out your HBCU. If you did not go to an HBCU and you have that regret like I do, then you can represent Hillman College, okay?
Allow me to reintroduce myself.
All right, so today this dedication is to the famous Black educators, Mary McLeod Bethune, as well as Booker T. Washington, aka Booker Teleferro Washington, okay? You know, I have some quotes. We're going to start with Mary McLeod Bethune. She said,
Bethune-Cookman, stand up.
Stand up, y'all, okay? First of all, shout it out in the comments if we can get our live action going on.
I know, I'm working on it over here, so don't worry. You know, there's tons. I guess you throw a little shade, YouTube throws a little bit of shade back, but don't worry, we got this. We gonna work this out.
Y'all, I live for the comments, and when I don't see them, I be feeling some type of way. But okay, so here we go. If we have the courage and tenacity of our forebears, who stood firmly like a rock against the lash of slavery, we shall find a way to do for our day what they did for theirs. Let's run that back. Let it marinate and run it back.
Yes.
If we have the courage and tenacity of our forebears, who stood firmly like a rock against the lash of slavery, we shall find a way to do for our day what they did for theirs.
I like that. I like that.
Now, for Booker Teleferro Washington, his wise words are, I have learned that success is to be measured, not so much by the position that one has reached in life, as by the obstacles which he has overcome while trying to succeed.
Yes. By the way, I just want to give it a quick little shout out there.
Yeah, go ahead.
You
know. Your sound went out just a little bit. Just a little
man,
bit.
I had to do it for the people. You know, shout out to all my Tuskegee.
Okay. It's all good. You know, I'm happy for you. I'm happy that you had the opportunity to go to an HBCU. Did you know that I was going to go to Florida A&M and I bailed last month?
Oh, you were going to go to FAMU?
Yes, I was.
Man.
You know, everything happens for a reason, because I don't know if I'm here right now. I don't know. But let me read it one more time. I have learned that success is to be measured not so much by the position that one has reached in life as by the obstacles which he has overcome while trying to succeed. So if you've had some obstacles in your life and you've overcome, then shout yourself out in the comments when they come back. Give yourself a pat on the back, and I salute you.
Yes, we appreciate your existence.
Mark.
Yes.
So, one highlight of this week, besides the fact that it's Black History Month,
yes,
was the fact that we got to visit via Zoom anyway, our the classroom for the Complex Series curriculum. What were your thoughts about that?
Oh man, that was lit. Like it was super duper lit. Like just being able to have the opportunity to like literally speak to the future and to talk to the young adults about like markets and everything else. And the cool part was we were only supposed to be there for like maybe like 45 minutes. And then like
1 hour.
Oh, 1 hour. And then all of a sudden it's like class is over. It's just like, yo, we got more questions. Yo, let's kick it. Let's talk. So that was pretty cool. And then on top of that, I'm telling y'all, like these kids are going to be scholarly, just like each and every single one of you who participate every week for every episode, for every pre-recorded video. They are coming. And when I mean that they're coming, yo, we're raising up a whole new set of wolves. The next generation of wolves, they're coming right behind us. So I'm excited. I know that the young adults are excited as well. It was a great learning experience on both sides. And yo, let's get it.
Yeah, I'm excited. So shout out to Legacy. That's the name of the high school. It's a longer name. I've been calling it Legacy for short. Yeah. And now the full name escapes me. So
it's like, I know it's Legacy, like maybe Magnet College or something like that.
No.
But I know that it's in Greenville, South Carolina. So if you're in Greenville, South Carolina, go ahead and shout us out and put it in the comment section. Go ahead.
It's Legacy Early College High School.
See, I knew it was, Magnet. I thought it was like super duper dope and it is. So that's why I thought Magnet. But yeah, good name. I'm sorry to butcher your name for your high school, but you're still dope students. And I appreciate all of your existence.
Chad is back. What up? Okay. A little delayed. Oh, I see all these HBCUs. Ooh, someone's daughter, Wayne Griffith's daughter, goes to Tuskegee.
Hey, what's good? What's goody?
They are shouting out. Okay, y'all. Morgan State. Okay.
Yo, when we have this cookout, I want to see everybody wear their school shirts.
Let me order my Hillman College. let me order it.
Don't worry, Jolene. I got you. You're an honorary Tuskegee member. I got you.
I mean, I do have a Hampton shirt.
Okay. Another school in which Booker T. Washington helped get started. So, I mean, hey, do your thug thizzle.
All right. So, Mark, we have a lot of questions that have to do with, I guess.
And if we end up going over, that's okay. Because honestly, I'm not going to be doing any live streams after today's episode. Though who knows? I may show up in Clubhouse tomorrow, but yeah, that's a maybe. So. Okay. Let's you got to give the people what they want. So let's give them as much value as we can tonight.
All right. So
I just want to say to all those folks that were like part of that whole Wall Street bets thing.
Mm-hmm.
Let's just take a long sip to that one.
Did you hear that gulp? I don't know if it came across on the audio, but
yo.
Okay.
Yo, even Aaron's thirsty on that one. So hey, don't say that we didn't warn y'all.
I'm saying, yo, there are people that made out like a bandit, like seriously. And we're not talking about the retail traders.
No, we are not. We are not.
$44 million on tickets?
Yeah, so we may as well tell the story before we get going. So pretty much there was a bunch of Wall Street stocks or Wall Street bet stocks in which that they were known as meme stocks or stonks, whatever you want to call them. But essentially there was like your GameStops, your AMCs, but then there was also one by the name of KOSS. Yeah, that's KOSS as in Cause Family. And the interesting thing about that is that while a lot of the retail investors and traders were buying and boosting up the stock, somebody was selling and they were selling a lot.
A lot.
And it would be, yo,
Put them on, Mark. Put
it
them
would
on.
be so hilarious if it was the KOSS family themselves.
Making shmoney. Okay.
I think it was like 44 million or something like that they made off like bandits.
Yes, 44 million.
I heard that, yeah, somebody said I heard Michael Jordan lost money. I don't know if it was Michael Jordan that lost a lot of money, but I think it was also the partners that he brought in that were minority holders inside the Charlotte Hornets. They also lost money too because they were tied to, I think, Melvin Capital. So I think that everybody just took an L on this one. So I think that the best thing that we can do for just history and time is just, ultimately move on, just like we did from the previous administration. So
yes, let's move on.
Okay, Act 2.
Wait, let me shout out some of these HBCUs. We got Southern University.
Hey.
We got Norfolk State University.
Okay.
Who else is popping up? Grambling State, University of Purdue.
Infamous band.
Spelman.
Okay.
Southern University. Somebody said AMD University. When they blow. When they gonna blow. They're not. Yo.
Wow.
That's hilarious. All right.
Oh, also we got to give a shout out to Howard University. They call it the Mecca for homecoming and everything else. And a lot of your Black Greek organizations were also started there. And then we also got to shout out a few others like your Johnson C. Smiths, which are smaller, but at the same token, they're here. I'll even give a shout out to Alabama State, though they're a rival, but we call them like the high school, but they got their education, they got that degree, so it's all the same. So congratulations to all of you that have attended wonderful, illustrious HBCU universities. And if you didn't, that's okay. I mean, it's a great experience to attend, but at the same token, you're there to get the education as well as build up camaraderie and friendships, which I believe that all of you have. So, and there's no greater pride than just looking at yourself in the mirror and just realizing that we are wonderfully Black. And on top of that, that we come from a great, rich history. So we out here.
We're hella out here in hella traffic. All right. So Mark, let's get to the chippage and the dippage because we need to talk about it. So we got folks asking about AMD.
Okay.
And in particular, what was happening with the short with AMD?
Yes. So apparently there was a little typo that happened where they did AMD and mistook it for AMC, and thus sending the stock traveling downward. And pretty much all in all, no bueno. Because AMD took a significant hit, and I wonder who's going to be coming for their restitution for that because of the fact that they lost a lot of money on that trade just because somebody made an error. So you have that. And then on top of that, it's like you also have like this short supply, which I did speak about a few weeks ago when we were talking about the shortage of chips. And but here's the funny thing, shout outs to Lisa Sue, man, because she be on it.
Dr. Sue, what it do?
Yo, like if you thinking about selling your AMD, please send me a shout out on Instagram or wherever, because I have no problem in buying up things in which that you leave behind for sure. Because clearly, if you are not in the know, I mean, word on the street is that AMD is not only just working with TSM, but they're also working with Samsung, because Samsung also makes phones that are going to be pretty dope. Supposedly, though, I don't really use Samsung phones anymore, but they are still dope. They're innovative. And here's the cool part. Those GPU chips that they normally use, well, apparently they signed a deal with AMD, and AMD is going to be bringing its RDNA into a Samsung Galaxy S22 chip or S22 phone next year. But they're also bringing in the chips for graphics into the phone that will release this year, which is their Galaxy Fold device. And I'm probably expecting that there's going to be many more devices, like maybe their Chromebooks, their laptops, and whatnot. So I think that this is a great relationship between the two, and I think that this is just only making AMD's like stay bigger. And on top of that, if we also want to talk about AMD, about them now partnering up with you know, somebody's stock bay or stock crush, whatever you want to call them. I just know that I wear a lot of red and their name is Tesla.
Yes.
Where you will be able to play a AAA game title, the same type of graphics chip that you're going to be using in PS5 and Xbox will be coming to a Tesla Model S or Model X. And I'm probably sure after that, a Model 3 and Model Y, which will probably be a lower tiered version of the chip, but at the same token, it'll still be there. So we see you, AMD, you out here.
AMD. AMD is one of those stocks where you really just, you have to know the catalyst, have a strong thesis, and refer to it often, because things just be happening. And 1 minute it's up and then it will just take like a little hit. It always dips after earnings. So you got to prepare for that.
Can I give people a little secret though?
Yes. If it has to do with what you told me, yes.
A lot of these companies have what is called a seasonality factor. And so sometimes if you go back and check some of the history, shout outs to one of the members of the Suicide Squad, AKA Hella Original. We talked about it, and I remember knowing of the site a while back, and they talked about a site called stockcharts.com. And on stockcharts.com, you can kind of look at the seasonality factor of a stock. And so I would say for any of you that are kind of getting a little bit discouraged about a stock, especially one by the name of AMD, or even, let's say, an NVIDIA, you may want to go back and look at and see what their history is and check the tail of the tape to see exactly how is that these stocks trade, and when do they start getting a little bit more active to get going. So, yeah.
Well, what you really should do is when you go to stockcharts.com, they do have a 1 month free trial, but even if you bypass that, there's a little drop down menu next to the search button, and you just click that, and then you click on seasonality, and then put the ticker symbol in so that you're looking for the right thing. Yep. It wasn't readily apparent, so I had to thumb through. So I did that work for y'all. So just going ahead and look at that chart.
Look at God, he be knowing.
He be knowing. Tebow says NVIDIA is doing better than AMD.
Oh, Lord, oh, little brother.
Now they asking for a stock charts login. Hilarious. Hee-haw, hilarious. All right, so we covered AMD. Let's get into Qualcomm, because it was running pretty high for a minute. But like you say, when report cards come out,
when the report cards come out and then we see what the real grades look like, then essentially we're sorry, but Qualcomm got sent inside in their own restriction. So they ain't gonna be able to come outside and play with the rest of the chips for a while. So they took a nice little dip and now they sitting. So Qualcomm, the interesting thing about Qualcomm is that, they had a great run, especially it's if you look at companies like, Apple. But though I know that Apple's looking to go into its own, band for 5G since they acquired Intel's division of band technology for 5G. So it should be interesting what the future is going to look like for Qualcomm, especially as other players start looking, to other companies. But I think that overall, Qualcomm is going to be just fine. I mean, a lot of folks like to look at Qualcomm as a company that's okay, hey, you're here, you're kind of just floating around. But you got to think about it, infrastructure takes time. I mean, we are just at the beginning cusp of what 5G is. I mean, where Qualcomm is really expected to shine is not really in the lower margin of your cell phones, but more so they're going to face high margin in areas of Internet of Things, which, we're still getting some of those. You're also having laptops those are going to be hitting the market much more. So, I mean, honestly, we're still in the early innings for Qualcomm as it pertains to this 5G play. Though I will say this, I wouldn't be surprised if Qualcomm's looking to make some acquisitions this year, because ultimately it's you can't be a one-trick pony out here in these markets. As you can see that this chip market is starting to heat up. So when you got companies like AMD out here working together with Samsung, and then on top of that, you got them on the cusp of potentially acquiring Xilinx as well. And then on top of that, you got, other players like Broadcom, which, I mean,
they've been kind of quiet.
For good reason.
They got their head down working. Okay.
We're just going to assume that they got their head down working.
I hope so.
So, it's still early innings for 5G. I mean, of course, don't get me wrong, you had Apple and Verizon plastering up 5G. 5G, I think they said during their launch for the iPhone, they had it I think they said it almost 60 times.
Mm.
And so with that being said, it's okay, well, a lot of folks don't realize that, 5G infrastructure is going to take some time, and ultimately the adoption as well, especially if you had other folks that were buying significant phones from different product refreshes. So again, it's still in the early innings for companies like Qualcomm, though that the chips are being made, but at the same token, it's what good is the chips being made if nobody's really buying the phones yet? So it's going to take some time. But I think that by the time when we look at the second half of this year, I mean, Qualcomm is going to be a totally different company. That is a fact.
Okay, so keep your eye on that. Somebody said, what about little boy blue turning up on us, aka Intel?
Money flows through Wall Street, and so when somebody's selling out of one place, well,
I'm glad you have that cap on. I was a little nervous.
Yeah, I had to use the one hand to literally set it up, but honestly, I mean, real talk. I mean, Intel. A lot of folks are trying to start positioning themselves for what the multi-year will look like. So they believe that this may have been the bottom for Intel, and they believe that essentially that there's a lot of strong upside. I just don't see the strong upside. I mean, don't get me wrong. I think that Intel is going to beat significantly on its earnings and stuff like that moving forward, unless, their short supply is just so, dominant that it literally hurts them. I think the biggest thing that we're looking at is that, you got data centers, which are getting threatened by NVIDIA as well as AMD. And then on top of that, you have, let's say, the desktop chip space, which you're being definitely threatened by AMD. It's going to be tough for Intel over these next set of years. I mean, really, really tough. And I know that they've been discussing whether or not they're going to work with TSM, Taiwan Semiconductor, but I think that doesn't even help them because Taiwan Semiconductor has already got so much backlog of other companies, as well, not only just chip companies, but also think about the auto manufacturers that are also in this space as well. So it's going to be tough. And I think that one of the things that a lot of folks don't realize is that Intel has its own foundry, which means that they can design and manufacture and process their own chips. The thing is just that, it's just not there. When you weren't thinking about this a while back, and now you're trying to literally embed this process in, it's going to take a lot of money. We're talking about billions of dollars in which that you're going to have to make the investment on, which I see that they're doing, or we'll just say a few $1 billion, maybe $2, where you're going to have to make that investment to try to scale as fast as you can so that way you can be relevant. And they're saying that they will get to, 7 nanometer by 2023. But when you put that into perspective, by the time when you get to 7 nanometer by 2023, where will your competition be? Since TSM has already done the 5 nanometer process. And I'm probably sure that Samsung is already working on the 3 nanometer process. So it's going to get a little rocky. So I would just say be careful to a lot of the folks out there that are ultimately trying to jump on the Intel bandwagon because of the fact that you see some volume going. I think that what's happening is, though, that you see AMD and NVIDIA kind of trading sideways and just going through a period of consolidation. The interesting thing is when you go through that and when people sell, they want to put their money elsewhere. So, of course, what would be the pivot strategy? Intel. So
y'all are
I'll just say this, buyer beware.
Well, now it's people are seeing a quote unquote live pivot, but from the other side. But someone, who was it? Oh, I just saw it in the chat. It's gone. Well, anyway, one of the cousins had mentioned that on CNBC, they were talking about a potential merger between Intel and Qualcomm. Okay, well, I see the snicker, but I'm not sure what that would do besides potentially, if Qualcomm could get their 5G.
Well, Qualcomm, they're a mobile chip.
Yeah.
So when you think about it, let's put this into perspective. when you think of Qualcomm chips, they provide like their own processor, and then on top of that, they provide a GPU for mobile devices like tablets and cell phones, and some Internet of Things devices. Okay, there's that. Then you got Intel, which has a lot of like, they're known for like, if you think about it, they were the ones that wrote Moore's Law.
Mm-hmm.
So, they're known for like, being the pillar within the semiconductor space. I mean, they literally, really help shape and define it. The problem is that when you lack the innovation, because sooner or later, and I think that it kind of like speaks to like, the prowess of like your Jeff Bezos of the world, when you realize that you've reached the sunset period in the time of like, when you think about being inventive or innovative, that you realize that, okay, hey, it's my turn to kind of like bow out gracefully and let the next generation of leadership come forth. And I think that Intel missed that. And then on top of that, you also have Qualcomm CEO, I think it's Mollenkopf. He's gone. Like, he's no longer there anymore. And so now you got like pretty much two new CEOs at two companies in which that they're kind of like, it's really kind of interesting to see where the future is going to be. Now, will they not be existent in these markets? No, they're very much so going to be very existent. And I think that sooner or later, Intel will get it together. But at the same token, it's just like, you missed your opportunity to really like keep that foothold dominance. And now when you let go, it's a cautionary tale, especially within the tech sector, to realize that, okay, hey, that this is what it looks like when you get too comfortable and you stop innovating. And when you see the true innovators, they're innovating because of the fact that their consumer base, as well as like for, their average retail consumers, as well as for enterprise. You see that they're consistently innovating because they want to provide a better product for them, versus like, okay, hey, well, we've got all this dominance. We don't really see any competition. So really, what's the point? We can kind of like just slow down. And that's exactly what Intel did. So, I mean, you could see it, but then the question is like, where would the value be for the two? Because, yeah, I just don't see it.
Okay, so not so much a turn up on Intel, but more so a two-step. All right.
Yeah, it's kind of like, I'm gonna like, I'm gonna sell out of, these other positions that have made me X amount of return, but then at the same token, when I start seeing a little movement, hey, it's been real, Intel, but I gotta go. My ride is here.
So we have some questions about where did it go? Pivots.
Okay.
So it looks like cousins are wanting to know, let's see, pivots. What's a pivot's move for long-term execution? Like, how would you go about setting up pivots for long-term execution?
Good. So when I think about a pivot, let's take a long-term 2-year contract, right? So typically what I'll give myself is about a 3-month timeline to look at whether or not anything that I'm reading or anything that I'm seeing is saying that the narrative or the thesis itself is broken. That's fair. If I see that thesis is breaking, then at that point in time, I already must know what my pivot is. So when I mean by pivot, it's a company in which that honestly I get defensive, or it can be something in which that to this company's loss means another company's gain. And so I'm looking to pivot during that period of time. Now, I'm not looking at, say, for example, always the stock performance. More so I care about the narrative of what's going on when it comes to the stock, or when it comes to, even if I'm looking at the ETF, a series of companies within the ETF, just to get an overall consensus of what the overall market looks like. So if I see that something is broken within that thesis, then it's time to pivot. There are no ifs, ands, or buts about it. If I need to hold for a little bit more time, I'll give myself an extra 2 months. And within that 2 months, I should see a rebound. I should see that's like rebound time. If I don't see rebound during that period of time, then it's time to exit stage right. I mean, it's done.
And
So
will you
naturally
take a loss
about 5
too?
months total, huh?
Will you take a loss too, if that's the case?
Yeah, so I'll end up and take a loss, but yeah, I would rather take a loss, realizing that essentially that I can step into something else and to recoup whatever it is that I lost into a better position that can perform well, and versus sticking with a position that is ultimately just losing and it's just terrible. And ultimately I can go from a loss to just like, okay, hey, this position just completely, I mean, I lost everything.
Okay, someone asked, what is an example of something being broken in the thesis?
So what does it look like when something's broken in the thesis?
Mhm.
Okay, good question. So let's say if you were going to go with the auto manufacturers. Okay, so when we look at auto manufacturers, let's say if you were looking to make a play on Ford, because I think I sometimes go a little hard on the other company, but y'all know who I'm talking about. Good morning. So then let's just say you're going with the thesis of Ford. And Ford is ultimately saying, okay, hey, well, we're going to be a little bit slowed down on this Ford F-150 because of the fact that we have a chip shortage. So now I'm asking exactly how bad is this going to look? And I'm looking at potential earnings down the road. So if I'm looking at potential earnings down the road, I'm saying, okay, hey, well, does this hurt their delivery time of them being able to get this out to the consumer? And on top of that, will they have enough time to go through quality assurance, quality control, and all these other things? And then on top of that, will the consumer want to stick around to actually buy this? Or if they know this, will they want to go to somewhere else? So, which means if I'm playing Ford, and if I realize that, hey, Ford isn't going to be there, then I may look to, say, for example, a Tesla, which may be my better play. And the reason why I say that is because here's where the thesis comes into play, where you can look towards it as a pivot. The reason why you can say that is because if you guys journey back in time with me, where Tesla had said that, okay, hey, we're going to pause our manufacturing on the Model S and the Model X series. Mm-hmm. And then at that same time, they were getting ready to go through this process of, okay, we're going to release these new Model S's and Model X's. Word on my street is I haven't heard anything about Tesla talking about they've got a chip shortage.
They haven't said anything about that.
And last time I checked, if you go to their site, they ain't saying nothing. They ain't said nothing on their site about like deliveries being delayed at all. So with that being said, now I ask myself, which company puts me in the best position? Do I stick with this Ford position in which that this can like potentially hurt? Mm-hmm. And this is hurting them on production, and then on top of that, you got other companies, good morning, that are talking about literally that their thesis was originally for 2030 and is looking more like 2040 because of the fact that you're a little backed up.
Right.
Meanwhile, you can pivot towards somebody who's already out here and doing their thing, and thus you would be pivoting. That would also be like oil. If you're looking at oil and realizing that the oil play is finito. Here's another thing. If you can predict the weather, then you can predict the price of oil. I mean, that's a simple thing. Like predict the weather, predict the price of oil. So if the weather gets cold, then ultimately the value of oil should go up. If the weather gets hotter, then essentially, well, there you have it. And then on top of that, you have a lot of folks that are switching from oil to going to renewable energy. So if I'm in an XLE energy ETF and I'm noticing that we're starting to see certain catalysts where that thesis of energy, traditional energy, being broken, and we see that, hey, the economics and the quantitative data says this is where the future is and this is where the money is residing, then literally at this point in time, then maybe a 10 is probably your better play. And thus you would pivot from, if you were in XLE, then you would pivot to 10. Solar
ETF, which today, well, it was in the bottom 3, so it could be a deal.
Mm-hmm.
Okay.
Still waiting on that legislation.
Well, we're gonna see. Okay, so up next we have this was a question. Does everyone go, speaking of like rotating and things of that nature, does everyone going to Samsung hurt TSM?
No, and the thing is like, TSM has a shortage, but yet same token, like you have to take into consideration these companies have long-term contracts. So a lot of these companies aren't going anywhere. They're not going to try to break a contract in which that honestly, TSM is out here, because even if you try to go over there and run to Samsung, I mean, you have to think about it. Samsung provides chips to all of its devices, and we're not just talking about like their mobile devices. We're talking about their kitchen appliances and everything else. And then on top of that, that also means that essentially that like the major sectors that are really hurting right now are auto manufacturers. Those are the folks in whom which that are getting hit the hardest because of the fact that the parts in which that they need, especially within the chips, I mean, they're just not there because of the fact that a lot of these suppliers literally provide it towards other arenas. And it's like, okay, hey, well, these have been kind of like our best performers. Now, of course, now when we talk about it in the form of volume, that may swing, but yet at the same token, it's like, you now send everybody over to Samsung and Samsung gets overloaded. And then next, TSM is like, hey, we are a little light. If you want to come back over, then it just doesn't make any sense. So honestly, I really wouldn't get too caught up in that at all. I think that honestly, you may start seeing partnerships. That's fine. But yet for the most part, TSM is just fine.
Okay.
I know Father Time is just happy about that.
Oh, he's going in on these comments. I see his little blue name popping up. All right. Okay, let me see. Oh, this is a question.
Okay.
That was earlier. So, okay. So we talked about pivots, and those are, when there's a dip in your position or the narrative changes, what have you.
Yep.
What are other things strategy-wise folks can be doing when there is a dip?
What can the folks be doing if there's a dip coming? Well, one, it depends upon the strategy in which that you're in. So if you're playing long term, then you look at it in the sense of these dips don't really matter.
The dips or blips?
Pretty much. I mean, there's just a small blip on the screen. I mean, honestly, when you put it into perspective, let me help each and every single person real quick. I'm gonna try to see if I can pull up something. Let's go to a chart, shall we?
Wow, charts on a Thursday. Okay.
I mean, I cannot do it. I mean,
I think you should. I'm just saying.
So let's take, say, for example, since everybody wanted to hear about AMD, we'll take AMD.
Oh, they're salivating. I was like, yes.
Okay. All right. So let's go ahead and share this screen. So as you can see here on my screen, I have AMD over the last year. But when you put it out towards, say, for example, a 2-year, do you really care about these dips? Or do you care about, say, for example, the stock going from, let's say, $23 all the way up to 87?
Right.
Now, of course, if you're expecting that, okay, hey, Mark, that's COVID. I'm glad that you said that. So let's go back in time here, shall we? So let's go all the way back to, let's say, 2017. Oh, wow, 2017. Wow.
You in the future, Mark. Stay in the future.
The future is where I stay at, man. Actually, let's go all the way back to 2016, actually. And let's look at it from 01 January. I think that this should give a good look of where we're at. So again, do you care if AMD is trading at $2 and then making it to $11.31? Or do you care about the dips in between?
Yeah, so when you're holding long-term, the blips, it's just a perfect opportunity to research, bone up on your thesis, look at catalyst, see if the narrative has changed, all those things that we just discussed.
The crazy part is that a lot of folks probably are like sitting back and thinking about, though, check this out. AMD was once upon a time, back in January of 2016, was $2.03. Imagine that. And then bring it in to today, where we literally will probably have to like refresh this. But if we bring it in today, of just looking at it over, say, for example, year to date, it's now trading at 87.
Oh, what was that dip in February? What was that?
So the dip in February here?
Yeah, in that chart. I just want to see what price it was at.
This is around the same. So we saw it from 94 to say, for example, 85. So that's pretty much AMD's in correction right now.
Okay.
If we look at it in, so if we look at it in perspective, I always like to look at it from a 1 month chart just to see exactly where you're at, or 3 month. So here we were at our high at 97. We came back, and ultimately now we're back at, say, for example, 87. I mean, the goal is that essentially that we'll start moving out of correction. Now, notice something here. You had a lot of heavy duty volume of selling. Just like you had a lot of heavy duty volume of selling here. And then what happened?
Yep.
Heavy duty amounts of volume. So essentially what you're starting to see is that essentially that there's a trend here saying that there's a consolidation of sellers preparing to run up out of the stock. Now, just for the sake of, for folks that would like to look at stockcharts.com, let's pull it up for the people, shall we?
We shall.
And let's look up and we'll pull up AMD's seasonality.
Yes.
And I'll share the screen with everybody just so that way we're on the same page. So if we look here at January, February.
You make it bigger?
I can do what I can. Hopefully that helps folks.
Yeah, that is.
So we look at, say, for example, January, good month, February, kind of come down, then we run up to March. Now let's go all the way back to 2016 or 2017. We had a major run up, 2018, 2019, and 2020. So if we want to put it into perspective and look at, well, let's say, here we are. So performance from 2017 to 2021. But if we look at February, it's kind of like known as a garbage month for AMD when we put it into perspective. So again, honestly, you know, if you're really worried, you're focused on the long term. Do you really care about what happens in, say, for example, 1 month? Or do you care about what happens more so over the term of, let's say, 6 to 9 months?
All right, so you all heard it. When there are dips, you can either assess for a pivot, which Mark went through, or you can tighten up your long-term focus. You could also buy more during the dip, you know, you can do that as well.
I mean, it's a great way to dollar cost average. So, all right, what's next?
Let me see. Okay, so we got a question on thoughts on Square's Road versus competition like Sophie, Stripe, Clover, and PayPal.
It's funny because I was actually planning on going through the Big Ideas digital wallets.
Well, let's go for it.
Okay, so as we continue on from our wonderful friends over there at Ark Invest that we're dissecting exactly what they did, let's talk about digital wallets. So, I mean, digital wallets represents a 4.6 trillion opportunity in your pocket. So what are we talking about here? We're talking about essentially that we're going away from cash. And I don't know when's the last time I actually had cash. I think my favorite time of, you know, never even having to pull out my wallet was when I was in Barcelona. And honestly, I literally used my phone to pay for everything, just using digital wallet to pay for everything. The interesting thing of where we see ourselves now is once upon a time we had cash, and then we had checks, and then from checks we had debit cards and credit cards, and now we're at a point where it's just like, honestly, you just have your email or phone number. And so they believe at Ark, and honestly, I think that they're pretty solid, in which that Venmo and Cash App and venture funded startups are likely to upend traditional banking. And I think that you're already starting to see that, where even your credit card companies like Capital One are even starting to get into the banking space. You're seeing a lot of online banks that are starting to come out of, the woodworks to be able to supply for not only just regular individuals, but also for small businesses and medium-sized businesses. So they're saying that digital wallets are beginning to penetrate the full traditional financial services stack. So that's including brokerage and lending. That's true, because when you look at what happened with Cash App and also in some of the other apps, you're able to buy stocks, you're able to buy cryptocurrency. You're also even able to apply for loans, like small or small business loans through, say, for example, Square. So honestly, I think that it makes all the sense. One of the things that you may want to pay attention to if you're interested in Square is pay attention also to their POS system and how that embeds across the entire ecosystem of Square in their financial services. Because with that, it was supposed to be the a la carte for small business owners or medium-sized businesses, for their management, employees, as well as for lending as well. So it's going to be interesting after COVID, what exactly that looks like. So if we look at what happened in China, mobile payments are at a 2.5x its GDP. So that means that it's 2.5 times its GDP size, the entire GDP size for China. So putting it into perspective, I think that they had it listed at from roughly 2 trillion in 2015 to an estimated 36 trillion, nearly 3 times the size of China's GDP in 2020. So yeah, if we look at it right now, yeah, that's about I'd say that's about $15 trillion in China GDP, but yet at the same token, we're at 35 trillion in mobile payments in China. Just to put that into perspective. And this has just been growing ever since, and it's not stopping. So here's how you kind of break it down across the spectrum. These are all the services in which that are used across the spectrum. And of course, we have some over in North America. And then on top of that, we have a few, like, say, for example, Revolut, which is definitely well known over there in Europe. Shout out to our friends across the pond. And then on top of that, over there in Asia, they definitely use a significant amount of WeChat. How do you know this? Remember that time where they were talking about the ban of, say, for example, Chinese company WeChat? And then that also hit Apple.
Yeah.
So the reason why is because a lot of those folks use WeChat to, say, for example, use it for their marketplace payments to even buy either things with their iPhone or to even purchase Apple devices using WeChat. And then, of course, you have Alipay, which is through Alibaba, and, so many others. And then on top of that, you also have Africa, to our friends over there, our family over there in the motherland. And then on top of that, we have South America, which, as you can see, they have quite a few mobile payment services there where they're all digital wallet based. And like I said, this is just forever growing. So when we look at it, so JP Morgan Chase deposit accounts versus Cash App and Venmo. So if you look at it, look at the mergers across the board where you had merger after merger after merger, and then Bank One acquisition, and then Washington Mutual. Shout out to my grandmother who used to work at Washington Mutual and left before all of the shenanigans took place. Shout out to you, Caroline St. Cyr. Love you. And then on top of that, look at how long it took for the rise of these things when you talk about the active users in the millions. And then just look at how Cash App and Venmo have just literally just taken off. And then think about it like this. Venmo started through PayPal, which started way before Cash App. Well, not way before, but a little bit before Cash App. And just look at the trajectory of where Cash App is even looking to eclipse. So Cash App will probably eclipse, traditional JP Morgan deposit accounts this year, unless JP Morgan is and we know that JP Morgan is looking to get into JP Morgan is looking to get into digital wallet space. But the question is that, okay, hey, can you outpace Cash App or, say, for example, Venmo?
Do you think they'll try to acquire a digital?
It's possible. It's possible, though, that I don't think that they're going to be able to acquire Square. I don't think they're going to be able to acquire Cash App. But there's a few other services out there that, that make sense. For example, there was somebody that was trying to acquire Plaid. and that deal fell through. I wonder who would be looking to acquire it now. So let's go further. So digital wallets can acquire customers for a fraction of bank customer acquisition costs. So look at the cost of what it costs to literally, acquire, customers for credit cards, and then look at the cost for bank retail checking accounts. Look at the cost. But then when it comes to setting up a digital wallet, look at the cost.
Yeah.
$20.
Wow.
Consumer lending, look at that. These are all the costs that it takes to actually acquire the customer. It literally only takes $20 just to acquire the customer now.
I do have to say that a digital wallet is quite leisurely. Super convenient as well.
So, this is one of the major reasons why you see a significant boom within the digital wallet space, because it doesn't cost that much to acquire. So bank branch costs are rising while their utility is decreasing. So what we mean by that is the cost to, say, for example, run a bank is very high. But then at the same token, their utilization, so which means people actually going into branches, utilizing, sitting down and talking to their bankers, is actually becoming kind of like non-existent. We're starting to see,
COVID. Especially during COVID times.
Well, you would think that, right? Look at the cost, but look at the cost rise as it pertains to occupancy expenses per bank branch over the years. Like that's crazy. Like you have to take into consideration the leasing of the space and everything else, or like the building, the utility costs, all of that. That's a pretty hefty cost to literally sit there and run a bank. Whereas you can literally just be digital, pay the software devs or software engineers a wonderful salary in which that they can keep making the platform more robust. And then on top of that, find ways to incorporate artificial intelligence and machine learning as well as deep learning. So that way the experience becomes even greater. And that's, pretty much your banks are non-existent. So traditional banks are facing potentially sizable risks. So let's go through those real quick. Digital wallets are entering the unsecured lending market, suggesting that traditional bank lending is unlikely to recover to the peak it hit in 2019. According to Ark, it estimates that bank interest income on credit cards fell more than 10%, or roughly 16 billion in 2020, and is likely to drop more than 25% further from 130 billion in 2019 to 95 billion by 2025. And then, of course, you have digital lenders such as Square, PayPal, Affirm, Klarna, and Lending Club are likely to take share from those traditional banks. And that's true because we're already seeing it. You're looking at, and as you move forward in the generations in which that are coming forth, and this becomes their norm, right? It's like, for example, I'll give you a stark example. When we talk about like what became the norm for, say, for example, millennials, was having a computer. Was having a computer or having a DVD player, whatever it is. Now, the next generation that followed, like I always believe that there's two phases, there's two stages in every generation. So you have an older part of that generation, and then, say, for example, a newer part of the generation. So the newer part of the millennial generation, they grew up where it was like text, social media, it's all here, it's at our fingertips. Even banking started to change a little bit because they didn't really deal with a lot of cash. They didn't really, like, they received gifts in say, for example, deposits. And then it's like when you think about like what the Generation Z is looking at, they grew up with literally the iPhone, the iPad, and maybe a few other Android devices, like, for example, Chromebooks and all that other stuff. That was their norm. And so with that, doing everything that you can on mobile experiences, since there's so many apps across the board, that literally became the place where they are. They're not, and think about how companies have also shifted. Like, for example, once upon a time, you could buy a product and literally it was a one-time purchase. Now you got companies like Adobe that no longer do one-time purchases, and their business is subscription. So it just goes to show you exactly how is it that the system itself has moved. And of course, you have the banking system, the traditional banking system, that tried to get on board with a system called Zelle. And let's just be real, that system just couldn't keep up.
I don't like Zelle.
So when you look at the future of what's coming, you have companies that are testing sending money over audio waves. So, and also using biometric and all those other things. And that's all just going to be digital. So, which ultimately has no necessary need for really, traditional banks, unfortunately. So each digital wallet could be worth roughly $20,000. So they say the potential value per average digital wallet customer across commercial and financial products in the US. So you have offline and online commerce. So that pretty much means like you're shopping. Payments. So your payment system, whether it's like, paying for things like bills and stuff like that. And then on top of that, you have insurance, personal credit and mortgage, saving and spending account, and then brokerage. Like, think about all those services all combined in one. And I think that that's ultimately where a company like Square is literally headed into, where they become that pretty much ecosystem of the entire, life cycle of a person's financial scope.
We have a lot of cousins that are saying they like Zelle. I don't like Zelle because they try to place a limit on how much you can send. I don't like limits like that.
We should be living in a world without limits.
Exactly.
Financing. So let's size up the opportunity, shall we?
Mm-hmm.
So they say in their research, if each estimated 230 million US digital wallet users were valued at $19,900 in 2025, the US digital wallet opportunity could be worth 4.6 trillion. Now, remember how that number came back where we started earlier, where we talked about 4.6 trillion. And this is how you kind of play it out. Digital wallet users by the millions over time, and then looking at the value per customer rising at the same time.
Wow. 4.6 trillion.
Yeah.
That is a lot of money.
Yes. And that's that. I mean, that's literally a digital wallet. So when you think about even brokerages, I hate to say it, but like you're gonna probably see more things like Robinhood coming to the forefront. Now, whether or not they will be just as efficient, I think that Robinhood could be, say, for example, an acquisition target. Or if it goes IPO, I mean, I think it's still gonna have a sour taste in a lot of people's mouths. But overall, my focus and my thesis probably makes Robinhood an acquisition target to either one of the large investment banks, or say, for example, one of the existing players that are already out there. Like if you had Charles Schwab gobble up TD, and then of course Morgan Stanley gobble up, E-Trade, and then of course you got Fidelity out there, then those are really the three major players now. Now, where does that leave Robinhood, especially given that they've been going through quite a few ordeal of woes? Well, so who does that look like as a potential acquisition target for this company to give it more emphasis as well as more validation as well as structure? Well, you got companies like Fidelity, you have companies like JP Morgan, you also have Goldman Sachs, and quite a few others, maybe even Citi. I don't know if Wells Fargo would do that, but I mean, we'll even throw their name into the hat. But you've got opportunities there, but for the most part, yeah.
I'll have to look and see who has how much cash on hand. Acquisition like that.
Sure.
Okay, now let me see. That was really good. I appreciate Ark Invest and their big ideas. Okay, so someone's asking, you had mentioned Adobe. So someone asked, is Adobe going to heat up, or is this something to pivot out of?
I think that what we're looking at for Adobe, and honestly, it's partly due to COVID. I mean, now don't get me wrong, Adobe is doing phenomenal when it comes to their digital sales platform, as well as their Creative Cloud is just, it's out here. And I think that once you're in the Adobe ecosystem, it's hard to get out. And on top of that, they started doing a lot more government contracts. I think that that's not going to stop. I think that also they have a plethora of things in which that they can turn the lights on. So honestly, I'm not turning the lights off on Adobe. I would strongly urge people to go look at the seasonality for Adobe, because Adobe had a great year last year. And, it's okay for quite a bit of these winners to literally take a break. Yes, stocks do go up over a long-term trajectory of time. And I think that some folks are out here literally getting a little bit too antsy, expecting for things to cook like a microwave. And we talked about this, where it's just like, you got to stop looking at every single company as a microwave stock, because just as much as they heat up, they also cool down just as fast. Like, for example, something that's really, really microwave is just like, and then just turned into flames because you left it in the microwave for too long, was like your GameStop and AMC and, many others. And now it's like, you got to sit there with this, and eat this burnt meal, which I feel bad for a lot of folks whom wish got burnt in this process.
Mm-hmm.
So, but then you also have some positions out there that are, they take a little bit longer to cook. But the thing is that you have to put it into perspective is you bought the time. You bought the time. And I know a lot of folks are trying to go for leverage plays. Sometimes leverage plays are not always going to be the route to go. Sometimes it's better just to, sit down, stay put, and just chill. One of the things that I'll give a lesson. I remember one time I was angry as a kid.
Okay, it's like, dang, when's the last?
As a kid, I got upset about something, and one of the neighborhood kids that did something that just literally just pissed me off, and I wanted to react. I wanted to react so bad, and then my grandfather just pulled me aside and said, "Sit down and just relax." And the kid was literally acting up, came I'm sitting there on my stoop, in my front porch, while watching this kid who is literally just antagonizing me. And then all of a sudden, his mom shows up.
Uh-oh.
And then it's I just witnessed poetic justice pick up. And it was just by me sitting back and being patient and just sitting back and listening to my grandfather. Apparently, he got in trouble with not only just messing with me, but also one of the girls from down the street. And her father contacted his mom. And his mom came home quickly and wrecked shop.
Wow.
And so the moral of that story, in which I tell folks, and it was the reason why I say it was poetic justice, because just as much as he was antagonizing me in the street, that poetic justice was taking place right there in the street. And the reason why I say that is not because of the fact of in the sense of revenge or anything like that. That's not the point. The point is sometimes it's best that you just sit back and be still. Sometimes it's just best that you sit back, be still, don't be reactionary, and just let certain things just play out. And that's honestly how you sometimes have to look at the market. You've already you've already given yourself the time. You've already priced in, say, for example, any potential pullbacks. You've also did a significant amount of shaving when you were doing your strike price formulas. So you paid for it. So you may as well just sit back and watch. Now, of course, if the strategy itself, the thesis is falling apart, for example, let's just say that its Magento platform is literally just not there, and they're not getting the type of sales through other platforms and everything else. If that's falling apart, and if their digital cloud is also falling apart, then at that point in time, now we got to start having that different type of discussion. But if that's not the case, then honestly, just stay put. Stocks are going to have those moments in which that they take breathers. And that's fair. I mean, not everybody that comes into the market is a buyer. Some people have been in the market for quite some time and they want to take profit too. So sit back and relax.
And deal with it. Or I thought you were going to pull up the shades. Oh, Lord. Okay, so that was mainly, that was most of the questions. I do have one announcement that I need to make, but that was pretty much the question. There was a question about Apple and Hyundai.
I can answer that.
Okay.
So, I mean, I'll just address the whole auto manufacturing market. The story told so far. So we've been hearing about Apple making this Apple car. Now we hear about them partnering up with Kia and Hyundai. Hyundai being a Korean company. And it's interesting because at the same time that we're hearing about this story broke about Ford teaming up with Google, and that Google's Android platform will be supplied on or in a Ford vehicle. Now, I don't know what that's going to look like. I mean, they got Google Car, so sure. So when we look at it in the sense of autonomy, I think that Google's Waymo service could also be embedded there through licensing through Ford. And then I think the same thing, I think I said this a while back, I don't see Apple going through the process of doing their own manufacturing and spending that much amount of cash. Like, because that's a lot of cash to like literally get in this marketplace. I didn't see that happening. What I did see is that them using leverages of software and whatever else R&D that they're embedding, and then bringing that to, say, for example, working with certain car partners and embedding that system into, again, Hyundai and Kia. Now, again, we're dealing with a chip shortage that's in this market. So now you got companies like, I'm just gonna have to say it, GM, that literally has also promised to bring 35 electric vehicles to the marketplace. So this EV market is heating up. The autonomous driving market is heating up. Here's the problem. This is where it's like, for me, I get a little nervous. The reason why I get a little nervous is because now I'm starting to hear that everybody wants to make an EV vehicle. Okay. There's validation in showing you that it's more efficient and everything else. We got that part. And then we're hearing about all this autonomy, in which that we haven't seen that much road time on the road. So it's going to be very interesting to see exactly how these things play out and what they will look like in real world experiences. Now they're testing it out in California from what I hear, but again, I'll believe it when I see it. You got, like I said, you got Google out here, you got Amazon out here, you got Chevy Cruise, or, I guess that's GM, working together with Microsoft. You also have Apple out here. And then on top of that, you have NVIDIA, which they're embedding themselves across multiple different auto manufacturers. And then you also have Tesla. Again, it's going to be very, very interesting to see exactly how this shakes out. But like I said, I'm nervous because of the fact that everybody's going to try to find a way to skin the cat here. And I need some receipts. I need some proof, because we can't all be like Oprah and be like, you get an EV, you get an EV, or you have autonomy, you have autonomy, you have autonomy. It's like sooner or later, I think that what you're going to see is that a lot of these autonomy providers are going to be out here. And then sooner or later, you'll start to see a consolidation because of the fact that, they're just not accepted across the market. And then you'll start to see that other players maybe start to gobble each other up. I think the company that focuses on putting together a strong neural network that is able to talk to the city along with talking to the vehicles, then that's probably going to be your winning company.
So that sounds like Tesla to me.
I mean, it could be Tesla, but also at the same token, it also could be NVIDIA. It also could be Google. So those are the top three that I have on my list. If I'm looking at it from, best to not so best, I would probably put it at Tesla because of the fact that they have way more real world driving hours. And then I would probably put Google Waymo and NVIDIA kind of very close to each other. And then after that, it just gets a little murky there, because, you say that there's Zoox, you can say that there's Cruise, you can say all these other companies, but again.
Not the facial expressions. Oh, here's a question that came in earlier, but I forgot to bring it up. Folks are wanting to know, what is the deal with U.S. Steel?
Infrastructure. I mean, are we talking about like the stock is kind of like underperforming over this period of time? And like I said, you had companies that were trading at their 52-week high, and now you've seen them come back and take a breather. Jesus. I mean, like, everybody just expects for everybody to just be a world-class sprinter out here and honestly take no breaks. I mean, if you ever get the chance, go back and watch Usain Bolt literally train for the Olympics, and like they would make this man run, and then he would like stop and just like literally just have to hurl because of the fact that he was out of shape or whatever it is. Sooner or later, you run out of gas or you run out of energy, and you need to go and get that recharge. So, I mean, honestly, we're at a recharge point. Let these companies live. But again, like I said, the sands of time are coming. So we hear y'all, and we at the Come Up, we like to remain like, we like our portfolio to be actively managed, and we like it to stay like, in tip top shape and primed and pruned. So you may be seeing some things come out tomorrow, possibly latest Saturday, of new picks coming to the forefront. I just want to put that out there.
It's coming. Yeah, there was a few people asking about that. Well, when is it coming? It's coming. It's coming. All right. Well, that was the majority of the questions, a lot of repeat questions. I do want to make an announcement. This is from Cousin Z. Mark, were you able to see the second Meet the Cousins video? Did you see it yet? It's
No.
Coach Ed. So Cousin Z has put together this is for the Come Up Cousins Facebook group. So Cousin Z has put together a video series within the Facebook group called Meet the Cousins. And she did the intro video. She did a great job.
Okay.
And now the next video up is Coach Head.
Nice.
So you get to learn more about the cousins, what they're up to in the world, what their portfolio is looking like, those sorts of things. So if you are in the Come Up Cousins group, be sure to show Coach Head some love, show Cousin Z some love, and get to know your cousins. And this is perfect as we're leading up to the cookout. Shout out to the event planning committee. Y'all are fantabulous, working hard and full of inspiration, imagination. I cannot wait to meet all of you in person.
Yeah, so I also want to say a few things too, Jolene. Congratulations for reaching 10K. I mean, honestly, 10K strong on supporters, as well as, family of people and who are supporting you on IG. Congratulations.
Thank you.
And, I wanted to get that out before.
Oh, Lord. What's coming?
We're going to have to change the effects here, like real quick.
Change the lighting, set the mood. Okay.
We're going to have to, just, we're going to have to bring it down a notch a little bit.
Oh, man, I wish I had it's probably packed somewhere, my disco light.
Look here.
Uh-oh.
Let's get some salient points out of the way, shall we?
Yeah, go for it.
We here at the Come Up series believe in transparency. So what we did was we showed you a burner account because of the fact that you, the people, should see exactly what is it that we were trading and what is it that essentially where some of our wins and where some of our losses were. Actually, let me remove these. We did that because of the fact that we wanted to consistently earn your trust, the viewers and the family, to make sure that essentially that, hey, we're not out here capping. We're just showing you that essentially that this is what it looks like when you focus and execute. Now, a lot of you there are a few of you that may feel some kind of way about that out there. And that's, well, I mean, then it's like, maybe that's not fine. Maybe it's time that we as a people, we as a community, start being okay with being able to say, okay, hey, well, if a person is willing to teach us, then let's see exactly what is it that, like, what's their strategy? I mean, learn the strategy instead of like just doing the simple dangle the carrot over everybody else's head. Let's just teach each other. It's more so in the sense about sharing your philosophy as well as sharing your strategy. So that way, truly people can learn. A lot of folks have learned from me in my mistakes. They've also learned from me also in my wins. That's what brings it all around full circle. So that way, each and every single one of you become great traders. In my portfolio, you saw where I took L's, and some of them I took L's on purpose, but yet at the same token, it's like I had a purpose within my portfolio. There was a strategy. If you notice, if you go back and watch the video, there were multiple XLK positions. So XLK was always my strategy throughout the entire year. And then, of course, I also had SMH, Ark, and XLY.
Yep.
Those were my focus. Now, of course, I ended up pivoting over to Tesla because I felt like it was a better play. There's nothing wrong with that. the thing is that we got to get to a point where, and it's like I said, you know, the whole, if you bite my style, that's fine. If you're biting my style, biting my strategies and everything else, my thing is just be transparent and just be honest about it. That's all I care about. And the thing is like, you know, if you want to carry my strategies on as if it's your own, or the come up series strategies as if it's your own, and if that makes you feel better, that's okay. The focus here is that each and every single one of these people who watch us, the focus is for them to win. It's not about any of, you know, it's like, and I'm going to really say it, like, honestly, there are folks out there that teach or that make more money through their programs than they make, say, for example, within the market. Let me run that back for you. There are folks out here that make more money doing teaching programs than they do, say, for example, within the market. Our focus is, and what we've always done, is have you focused on the market and learn from the strategies and what we put forth. That's always been the plan. So there's no confusion about it. There's no mistakes. There's no nothing. You know exactly where we stand. This is not a shot at anybody. This is not a dig at anybody. There's no shade here. Hence the reason why I took these off. This is us coming together as family and saying, yo, this is where we're at. And the focus is the people. And if your focus is not towards the people, and if your focus is essentially yourself, then maybe it's time that we, like, you know, as leaders that lead the culture, it's time that we start having hard looks at ourselves and saying, okay, hey, well, what is it that we're doing wrong? And what is it that we can do better? Because I believe that we can always do better. And if that's not you, and if that's not your speed, then that's completely fine. You know, if you want to throw shots at me on IG or whatever it is, I mean, I don't really care. I mean, honestly, I really don't care. These people that I see here, that I hear their stories, that I listen to them, I hear about their journeys. The thing I notice about each and every single one of you that are on the Come Up series is that you've gone from beginners to now scholars within a period of time. Mm-hmm. That's ultimately how I judge anything. I judge it based upon your knowledge, your wisdom, and then on top of that, I always say, the more you learn, the more you earn. And the proof is in the pudding. So, I mean, with that being said, I just want folks to know that this is no dig towards anybody out there, no shots below the belt, none of that. It's all about making sure that folks who come from underrepresented groups, AKA us, our people, they win. Because if we as a people, if we're not winning, we're not, one, taking our reparations out of the market. We're not building that generational wealth. We're not providing a pathway for the kids that will one day follow us. We're ultimately just perpetuating the same type of problems that have plagued our communities for quite some time. So for me, this is the last word. You will never hear me speak about this again. You'll never see me even talk about this again. Even if a person wants to test my shell to see if I'm hard boiled, you won't even get a response from me. Because the focus is, if that's the type of thing that you're looking for, then honestly, you come to the wrong place. My focus will forever be about the people and the kids, in which that honestly, they deserve our time, our energy, and all on top of that, our utmost best. And I guarantee you that this year, like I said, it's all about us being legendary. And we really, really mean that. And then on top of that too, we're going to discuss, spoiler alert, we're going to talk more so about economics, quantitative and qualitative. We showed you some of the basics. We'll still even bring those things in to show you how they play out. And that's the reason why we're going through Ark. And we're going to even bring some folks that come from different areas from around the markets. So that way, essentially, they can also speak on some of these things as well. And this isn't going to be fluff. It's like, essentially, we're going to get down to the nitty gritty and literally, because the focus is to give you, the people, the truth and the knowledge. Mm-hmm. That's it.
Well, I can't wait. I'm excited.
I said a lot there.
You did.
All right. So, I mean, well, clearly we got the leisurely over here. Like Butter is just like in his own.
Butter stays in his zone. Is he even awake?
You good? Yeah, he's awake.
Okay.
He's like, don't touch me, fam. I'm still waking up.
Right. Look at him. Look at him. Oh, butter.
All right. So, y'all, thank you for rocking with us. I mean, honestly, it was, hopefully you got some significant value out of it. We definitely want to consistently give you value in every single episode. We're excited for the things that are going to be coming down the road. But stay tuned. More content is going to be coming because I hear that season 2 of Wealth Rituals is making its comeback. I hear that new episodes from the breakdown will definitely be making it as a comeback. And then on top of that, you may even see some new bulls versus bear. That will not look like me, but you never know. So until next time, I'm Mark Monroe.
And I'm Jalen GC, and the place to be.
And this has been your come up on Hot Take Thursday. We love y'all.